Hello out there and good morning, traders. It's January 29th, 2024. Welcome to the Apteros Daily Market Insight. So I'm going to go through this kind of quickly with our recap and our updated levels for today because I've already done this recording, but I screwed up the video. So I'm going to try to get this out as quickly as possible to match up with the time that we have from the prep and the delivery. So taking a look at our recap here, we had a line in the sand that was bearish in nature last Friday on the 26th. Scenario one is that we were holding below that area. Scenario two is that we broke out to the upside with it. And taking a look at the clear opportunities along with scenario one, we had scenario one opportunity here right off into the open. And it looked like we were going to end up seeing that overall first target there. We just didn't get the extra push that we needed to get down to that area. And we started seeing a push back up to the upside. Now, this particular leg of rhythm was something we discussed in the community at length quite a bit. The way I like to handle acceptance whenever it comes to the lower time frames, if I'm using them, is I like to see a leg of rhythm with 50% of that leg above the area of the line in the sand, the full area. That's the more conservative way. That's kind of the way I like to do it. And that would give me the full acceptance picture that we have switched into scenario two. In this particular case, if you look at this leg of rhythm from low to high, the 50% area is right in the middle of our line in the sand. So it's not quite there for me on the acceptance picture. So I was still looking at this particular move up above here as bearish in nature. There were some students within the Nadger community that do things a little different with their process, and they were looking at this as a bullish opportunity. That's fine too. If you're going to make compromises on lower, rhythm and acceptance and things like that, it's something you just have to be aware of and plan for within your process. So easy scenario one right there, along with the plan and prep. For me, I was looking to get short in this area here based on the acceptance picture as well. I had some other people getting long here. If that was the case, if you did get long, you just take your individual loss and get involved later after the scenario is clearly back to scenario one, and you can kind of scalp into the close of the day, heading along with that plan, that line in the sand. So the obvious scenario one opportunities were here and here. And then, of course, here-ish, if you were monitoring that overall landscape is still bearish. If you were looking bullish, you could have possibly gotten involved here. It would have ended up being a stop for you with some small MFE there. But, of course, you had plenty of opportunity to make up for it with these two opportunities here along with the line in the sand. So that's a general breakdown for today with a little note on acceptance and how to handle it on a lower time frame whenever you're using shorter rotations. Some people, though, they like to use acceptance on the individual time frame that the narrative's coming from, in which case you would have been looking at something like this as the leg of rhythm that you were monitoring. And in that case, you definitely don't have any acceptance to the upside for scenario two. So really the only way acceptance showed up for scenario two is if you were someone that looked at this and said, well, that's enough for me to compromise acceptance and try to get long in this section here. Not a standard practice for us in terms of NADRO. You want to see that overall rhythm kind of extend beyond that line in the sand area. But if you did make that compromise, you should have made a note in your review and been tracking those type of compromises for yourself as you grow. Okay, so let's dive into today's DMI plan. All right, so now taking a look at our overall landscape for today's session, we're going to break down our scenarios based on the what is picture. The what is picture is that we are currently rotational inside of this particular area here. So that is scenario one. That's a general expectation. We rotate from the bearish area down to the bullish and then possibly back up again and so forth until something changes, until we see a clear break from that area. So if we break out to the upside, we'll take a look at what scenario two could look like. Scenario two is that we get this opportunity here where we break to the upside and we start seeing a move beyond our bearish area there. And I have this first neutral reference here as just an overall target for that upside, but it's the immediate, like, quick target one. If scenario two really starts getting some legs and playing out today, and we get above this neutral reference, we're going to start getting into that open space type of territory that I was talking about in the last couple of DMIs. We don't have a lot of targets until pretty much 49.89s. So it's a lot of open space up above here. You'd have to trend follow up above this neutral reference. But from there, that's just the way scenario two breaks down. If we end up seeing scenario three, which would be a continuation to the downside here, that would be something that we could also get on board with because we'd be leaving behind scenarios one, this general value area that we're seeing being built over the last couple of days. So if we get scenario three, it would be an opportunity to the short side heading into this neutral target area. And that's the breakdown of the full kind of overall expectations on these scenarios for today. If we see something that's a little bit more extreme, we start seeing some real bearishness heading down to this area here, This would be monitoring that for the upside. This would be the higher time frames bullishness being tested in this particular line in the sand. So if we get down below here and continue into that area, it's definitely something to monitor for, looking to the upside. But the truth is, if we get down below this particular neutral reference, a lot of this whole entire area is going to get more and more bullish as we continue to go down. So it's something to pay attention to if we do end up seeing a down move that gets into this lower neutral in bullish zones. Okay. For the upside, like I said, it's pretty much just wide open space until we get up into the 49.89s. You'd have to trend follow with whatever tools you use to do that. If you don't have any of those tools, my suggestion is that you pretty much just follow momentum, and whenever momentum shifts for you, just start taking scales. Other than that, that's our plan for today. Quick, recap of that. Scenario 1, more of the what is picture. Scenario 2, break above. Scenario 3, break below. Target here, target there. And for scenario 1, you're kind of targeting back and forth in between the two individual line in the sand zones.